Your laptop gets stolen. It cost you $1,200. You file a claim, expecting $1,200 back. Instead, your insurance company cuts you a check for $340. That's not a mistake. That's actually how your policy might be designed to work, and most renters don't find out until it happens to them. Today, I'm breaking down what renter's insurance actually covers when your tech gets stolen, why the payout can be way lower than you expect, and what your actual rights are when that happens. Let's start with the basics. If you have renter's insurance, your electronics, laptops, phones, tablets, gaming consoles are covered under something called personal property coverage. And this coverage isn't limited to your apartment. It also extends to theft outside your home. If your laptop gets stolen from a coffee shop, your phone gets pickpocketed on the subway, or your tablet disappears while you're traveling, that's typically still covered under the same policy. Sounds great so far, right? Here's the mini hook. Because this is where things get more complicated and where a lot of renters get blindsided. There are two different ways your insurer can calculate your payout, and the difference between them can be massive. The first is called actual cash value. This accounts for depreciation, meaning your insurer pays you what the item is worth right now, used, not what you originally paid for it. So, that $1,200 laptop you bought 2 years ago, depending on depreciation, you might only get a few $100s back. The second method is replacement cost coverage, which pays out based on today's prices for a similar new item without subtracting depreciation. These are not automatically the same, and which one you have depends entirely on your specific policy. This is genuinely one of the most important things to check on your own renter's insurance right now, today, before anything happens. Because if you assume you have replacement cost coverage and you actually only have actual cash value, you could be in for a very unpleasant surprise during an already stressful situation. Now here's another layer to this. Even with good coverage, your policy might have what's called a special limit or a sublimit, specifically for categories like electronics. This means even if your overall personal property coverage is high, electronics specifically might be capped at a lower amount. So, you could have $30,000 in total coverage, but only $2,000 of that actually applies to electronics as a category. If a thief steals several devices in one break-in, you could hit that sublimit fast, even while your overall policy limit still has plenty of room left. Let's talk about what you actually need to do to file a successful claim, because this part matters a lot. Most renters' insurance policies require you to file a police report before you can even submit a claim. This isn't optional paperwork. It's often a hard requirement. Filing that report promptly after discovering the theft protects your ability to make a claim at all. Here's a detail that surprises a lot of people and can lead to a claim getting denied entirely. If there's no visible sign of forced entry, like a broken window, a damaged lock, or a forced door, many insurers will deny the theft claim outright. Insurance companies want evidence that a break-in actually happened, not just your word that something is missing. This is part of why documentation matters so much, which I'll get to in a second. There's also a nuance specifically relevant if you live with roommates. Coverage can be limited or complicated in situations involving negligence or roommate-related theft. If a roommate, or someone a roommate let in, is responsible for the theft, your claim could be treated very differently than a stranger breaking in from outside. This is worth understanding clearly if you're in a shared living situation. So, what can you actually do to protect yourself and strengthen your position before anything happens? Two things really stand out. First, if you own a genuinely high-value item, a professional camera, a high-end laptop, specialized equipment, you can add what's called scheduled personal property to your policy. This means adding that specific valuable item by name to your policy so it gets its own dedicated coverage instead of falling under a general electronics sublimit. It usually costs a bit more, but it closes the gap between what you'd actually lose and what your standard policy would pay out. Second, and this one is genuinely the most practical, low-effort thing you can do today, document your belongings before anything happens. Take photos, save receipts, and keep a simple record of your electronics and their approximate value. If a theft does occur, this documentation is what gives your insurer clear proof of ownership and value, which speeds up your claim and strengthens your position if there's ever a dispute about what you're owed. So, to bring this together, your electronics are covered under renter's insurance both inside and outside your home, but your actual payout depends heavily on whether your policy uses actual cash value or replacement cost, and whether electronics fall under a lower sublimit. A police report is typically required to file a claim, and evidence of forced entry often matters for approval. If you have high-value items, scheduling them separately can close coverage gaps, and documenting everything now, before anything happens, is the single most useful thing you can do to protect yourself. This isn't legal or insurance advice. Specific coverage amounts, requirements, and claims processes vary by insurer and by state, so check your specific policy or speak directly with your provider to understand exactly what you're covered for. So here's my question for you. Did you know your policy might only pay depreciated value for stolen electronics instead of the full replacement cost? Let me know in the comments. And if you've never checked which type of coverage you actually have, this might be your sign to go look right after this video. If this helped, hit like and subscribe, because next week I'm breaking down another insurance detail most renters don't find out about until it's too late.